Good afternoon, everyone. This is Chrissy from Solstice ATR and our group at Axel Capital. We wish you a happy 2022 and all the best in the coming year. Before we get started, let's take a break and review some stuff before I do. One thing, we use adaptive algorithm for active trading. We're not a broker dealer. Past performance doesn't indicate future results. You can find us on website, Instagram, as well as Twitter. And on Discord, you can DM me under ZuzuPound9345. If you need any assistance, let us know. Hit the thumbs up if you like this video, and you can subscribe for the weekly video for free on YouTube. Let's take a look at the S&P 500 since the 1930s all the way to 2021, end of the year. We can look at historical facts from the 1929-1930 crash. If you had an investment of $1 million till 1932, the balance went basically from $1 million to 108 because there was a loss of 89%. Could this happen? Possible. Does it have to happen? No. In order to recover, it took it till 1955 to recover 100% of that $1 million. And if you have the time as a retiree or as an investment to tolerate that kind of pain. Second thing, let's take a look at from the 1945 till 1955, the baby boomers were coming along. There was World War I, World War II after that. Then after the 1965, the baby boomers, we had a nice boom in the market, and the policies in the Federal Reserve Board had changed, for each dollar you had to have a side of it gold and other stuff, and things were created. Afterwards, in the 1973 investment, similar situation happened. We had a loss of 49.93%. It took it till 1982 till 100% of that investment from 1973 till the 1974 dump to recover 100% of it again. Can history repeat itself? I'm not a bear. I'm just giving facts that things can happen and things can change according to what the policies are in the domestic as well as the international and the global markets. Let's take a look at another scenario. The oldest baby boomer in 1981, let's say they were born 1964, 1965, 1962, they were turning 35 then. Then you had a nice recovery from 1981 all the way till 2000, 2001. Then we had another reset. You can see I pulled out a little magazine, showed 1981. It had Indiana Jones. MTV came to cable. As well, Diana and Prince Charles were married. Unfortunately, what happened, I'm just trying to show facts and things that can happen in the future as well as what has happened in the history. And this is why I have these events on there. Let's go one more. The baby boomers in 2000, 2001, 2002, they started to turn 54. If they had an investment of $1 million from 2000 till 2013, basically there was an event in 2000, 2001, the tech bubble and the Twin Tower. You had a 51% drop, which made your investment $485,000. And in 2007, the real estate bubble happened. Similar situation. S&P 500, all the sectors got hit. There was a loss of 57%. So your portfolio was 423. It took it till 2013, 2014 to recover 100% of that $1 million that you had lost. Even if you waited from 2000 till 2007, you recovered it. From 2007 till 2013, you had to wait again to recover 100% of it. So this whole period, a decade was gone, and the baby boomer, when they were turning 50, 54, their investment on their retirement account was a little bit lower. And in 1981, 1980, Brad Pitt was the sexiest man alive. You can see that there. And the second thing, the iPhone or the Droids or the Samsungs or the Googles of the world had created a phone online, a touch phone, had internet as well on it, emails, and you can surf the internet and GPS, and you can take photos at the same time with your phone. So these are the events that can happen. And let's take a look at now, what are the odds of us recovering, of us resetting in 2022 or continuation? The oldest millennium now at 2016, 2017, they started turning 35 like the baby boomers. In 2020, COVID hit in February. March 23rd, there was a loss of 35% in the market. From March 23rd, 2 years down the line till December 31st of 2021, we had a 2-year run of 119% from that event that happened on this chart from here to here. 100% was recovered by November. Then eventually we ran up September. Then we ran up and continued because of the federal policy. If the Federal Reserve Board changes interest rates, inflation is around the corner, things can change. Most important thing, trade the charts in front of you. Ask us how we can assist you to learn a little bit more and protect 100% of your capital. Have no biased opinion to being bearish or bullish. Trade what you see. Act on every action and reaction, I say there. For every action, if you're going to question the move, if it's going down, or question the move is going up, by the time you make a decision, you are too late on your entry, and things may turn around and reverse on you. So, and trade, be fluid, be flexible. Don't be rigid around your thinking, because you are an investor. You're in it to make a profit, not lose money. And set up your goals for 2022. Ask us if you want how we can assist you in 2022. Let's go first. Take a look at the S&P 500. I'm going to make it short and brief. This is the January low of 2021. This is the March low. This is the May. This is the June in the S&P. Ever since then, we had a small in September, a reset till the July low almost, and we recovered 100% of it. We continued higher. We zigzag, we created a W. Is this around the top? Do we hold the 18 simple moving average on the daily and the 50 to continue higher? Or do we hold the 4,700, 20, 47, 15 in order to continue higher in the SPX? So I have the SPX here. We can reference the NASDAQ as well, the NDX, because there was a rotation in it. We can see that the NASDAQ is in a similar situation. It created that annual high in November, tried to recover, created a W, pushed up, but the NASDAQ sold off in the last couple of days of the stock exchange because it consists of the large cap growth tech companies and biotechs. So there may be a change in sector rotation. Pay attention to the 1850 and the 61.8 fib. Let's take a look at the RUT, which is the small cap. We can see since January run, since January 29, for the last 10, 11 months, we can see we've been range bound in this box. If I grab a box, we can highlight it from this area here to this area here. We've been range bound. We looked above in this area, then we eventually fell back in, trying to recover. We have to look at those sectors to understand, is that small cap, mid cap sector going to be a change in the market to influence people to look at these companies and the recovery, and things may shift to the other sectors. So we have to pay attention to it. We're going to remove this one. Let's take a look at the Dow Jones Industrial Average, $DJI. Oops, $DJI. We can see that the Dow, I didn't do much to it. I just left those channels there because I'm usually using the micro, the E-minis, the Dows. We can see that the run from February, we continued higher. We were range bound from May till about September. Then October, we had the run up. Then in November, we reset. Then we continued. It looks like we double topped up here, similar to these couple of bottoms here. We double topped here. Does this mean that the Dow is going to continue higher or not? Pay attention to the channel and the wedge coming down of it, because this was the breakdown of it. We're going to remove this one. You can see that the down channel, we have the 18 simple moving average and the 50 and the 38.2 fib on the daily charts. Let's take a look at now GC gold, GC. I'm going to go right now to GC and Bitcoin and crude oil, then come back to the S&P. We can see that gold for the last year or so, we were range bound. That was the annual high for the year. We fell down, we double bottomed, we looked up, trying to break out of that linear regression channel. We fell back in range between the 1830 and 1750. And eventually we're trying right now to make a decision if we break out of this symmetrical triangle. You can see that yellow dash line here and that dash line down here coming down. We are in a linear regression down channel. At the same time, we are in an uptrend. If we can continue and clear that 1840 area, I'm thinking the 1890s, it is possible if things do change from the currency of from gold, to American dollar, European dollar, to Japanese dollar. They may be a safe haven to turn to on the short term. I'm not saying that it has to happen, but there is a possibility if inflation is around the corner. Let's take a look at crude oil. Crude oil, we can see that the moves in the annual chart from low to high. We can see that the low was $47 and the high was $85 a barrel. Then Biden administration tapped into the oil wells that Trump had saved for the long term. We were efficient on oil. Now we have to rely on other countries to get oil out because they stopped the pipes. Does this mean the price of gas and oil can continue higher? We have to pay attention to what the sectors are telling us in that $75 range to 72, because we looked a couple of times. I considered this consolidation breakout, come back, retest it at the 61, look up. We came back again to around the 61 and U-turned back up. The 50 fib, which is around the $66 and $70, has to hold in relationship to where we are today. And the 18 simple moving average here in relationship to the 50, we're right under on the daily chart. Does this create a cup and handle to break out of this linear regression channel or not? Let's go to BTC now. Bitcoin, we can see on the annual chart, the low right now for 2021 to 2021 high is 28,440 and the high was 69,000. We came below the 65,000, 66,000. I said to everybody at 66.7, 68.7, be careful of it. It may reset. We tested the top. We doubled. I consider this like a double top. This is 1. This is 2. Look above. This is 3. Then eventually fail. Since it failed, this number here, you can see it was 65,520. We've been on a downtrend. In order to clear this downtrend and reverse back, we do have these two gaps down here. There's one here, and there's another one here. We tested a portion of it, not 100% of it. We fell back down. We tried to retest the 50,000 area, 52, and eventually we haven't filled 100% of this gap. If you look at it, if I zoom in here, we can see that professional gap in the overnight has not been, we double topped up here and we reversed back. We are in a symmetrical triangle, but we are in a down channel, linear regression channel. Does this mean that this channel can hold us? Possibly. If it doesn't, I would look for the 40,000 eventually, and eventually the 30,000 before continuing up. If the 40-42 holds us up where those two gaps are, in order to reverse and go back up, that's great in Bitcoin, but don't be biased to being either bearish or bullish. If things do change from that linear regression up channel here and it holds that 42,000 and reverses back up, we got to look for the other side of the fence in BTC. Let's do Ethereum ETH one more time. Oops. ETH. We can see Ethereum after the being introduced to the SCHG exchanges and stuff, it rallied to 4,400, fell back down, rallied back up to 4,900, double topped almost at 40. And let's call it 4,800, couldn't hold it, fell back in. We filled a portion of this gap that I had here. We still have this professional gap from down here on the push up. Does this mean the 116 SMA hold us on the back linear regression channel of the prior month. And I do have the last month Fibonacci expected move. I have to remove it. I have to set up my new monthly fibs. This is the annual fib from high to low, which is the 1371 to the annual high up here. This is your 50, this is your 38 and 61. Usually the 38, 50 act as support, if not usually the 61.8. And don't be biased. Let's take a look at the S&P 500 one more time /ES instead of you, or you can use the SPY. We can see that there is in this area in June, that little gap that never been reset. We are still in that area, and we have another one up here on reset in October, November. We have this gap here. This is a partial gap that was partially filled. You can see it. We didn't fill that one. There's those two gaps here, 1, 2, 3. I am watching this area. We do have the 50 and the 18. If the 18 simple moving average and the 47.40 does hold the market, that's great. If not, you keep an eye on the 46.96 and 47.11 to hold the S&P 500 in order to continue higher. If it doesn't, pay attention to the 50 SMA, then eventually the 61.8 on S&P 500. Let's take a look at one more time the RTY. We can see the RTY is in a similar situation. You can see the annual fib from high to low from January till, the November push higher. We can take a look at the NASDAQ and Q, similar situation. You can see the annual high from low to high from that 12,200 all the way to 16,700 that happened in November. Does this mean we can continue and not pay attention to the 50 fib as well as the 50 SMA and the 18 in the NASDAQ, but there may be sector rotation. Last but not least, I will show you the YM, and I'll do a couple of ETFs before I let you go. Keep it short and brief. The YM, you can see that it's a double top. Does this continue or not? Pay attention to the 18 simple moving average and that channel that's on the chart right here coming down to that fib and the 18 SMA. If you look at the NYA, this is the New York Composite, and you can see that's major sectors of it's almost 4 days range bound doing those dojis. If I take a look at the RSP, you can see that RSP did a rounded top as well. You look at SCHG, this is the Schwab. You can see it double topped or triple topped and fell back in because it's concentrated in large cap growth. If you look at ARK, I believe. ARK, I believe it is. Is it? No. ARK. I kind of blanked. ARK. We can use this one, that's fine. You can see that in the international markets that interest rates are starting to come back down. If interest rates are down in the bond market, do interest rates reverse to come back up? Let's take a look at the XLF. You can see that's the financial sector, XLE. You can see that it's starting to come, XLP as well. You can see that XLP in the consumer staples made a new high, XLV, as well as in the healthcare sector made an annual high on Friday. It reset. Remember, these fibs are from the prior year. I want you to pay attention to them. Last but not least, pay attention to what the S&P sectors do in the overall market. Hope this was helpful. If you like, once again, this video, hit thumbs up. You can subscribe on the weekly for free. If you have any questions, hit us up. Take care, over and out, and good luck in 2022.